My name is Andrew D'Souza. I'm the co-founder and CEO of Clearbanc. We provide financing for startups and founders to grow their business and acquire their customers without giving up equity in their business. So it's structured as a revenue share agreement. So we look at a business's fundamental metrics, how efficiently they're acquiring customers, how much they're scaling, and how scalable that revenue is. And we take a fixed share of their daily sales until we get our money back, plus a 6% fee. So we started by doing a lot of e-commerce companies, so funding companies that are acquiring customers online through channels like Facebook and Google. They've got to be doing probably about $10,000 of sales minimum on a monthly basis, and up to our largest companies are doing 500 million. So pretty wide range. We just ingest all the data. We're able to make them an offer instantly. We just launched a product called the 20-minute term sheet, which we actually launched on AWS, which is great. The idea is, instead of founders having to get on planes and pitch their business, give us access to your data. We pitch you on, why you should capitalize your company in this way, and can get started really quickly. We want those companies to grow and take more capital and pay us back faster, so we can deploy more capital to them. And whatever we can do to help them grow, that's our business model. Fundraising can be a huge time sink for founders, and I actually spent a lot of my career helping founders, go through the fundraising process and meet the investors that they needed to, and I think realized very quickly that one of the big challenges is it's a very opaque process. If you didn't go to the right schools and you don't have the right pedigree or network, you can't even get your foot in the door. And then once you get your foot in the door, you've got to take 3 months at least off running your business to go fundraise, and most companies can't afford their founders to do that. And then finally, equity is a really expensive way to capitalize, right? You give up control often, you give up a board seat, and equity is expensive if your company's growing. And so what we decided to do was create a more repeatable, scalable way to help companies grow. We're funding repeatable growth. So $1 in today equals $4 in 12 months. We can fund that on a revenue share, and we get paid back as that revenue materializes. And I think that's where a lot of high growth online businesses, that's where they're spending the majority of their budgets, and we can actually step in and fund that more efficiently than equity or debt. This year, it's about global expansion and diversifying. We started in e-commerce. We're diversifying away from just e-commerce to funding any business that has repeatable unit economics, and we're starting to look at that globally. Over the next 5-10 years, I think the idea is, can we actually shift the power dynamic? Can we shift the power back to founders and entrepreneurs, and away from the capital markets and investors who have sort of held that power for the last several centuries? And I think the way we'll know that we've won is we see the next wave of exits and IPOs, and people look back and be like, oh, remember those 2019 IPOs where the founders owned single-digit percentages of the business? That was a crazy time. Now we can really, control our destiny and own more of the business. And whether that is, I just want to run this forever, and I want to dividend it out, and I want to, hand it over to my kids, or I want to IPO it, or I want to sell it, I have that power. I'm not at the behest of my investors and my board. I can actually write my own destiny and build the type of business that I want to. Yeah, AWS has been great for us being able to stand up new products. We manage a ton of data and being able to do that in a secure way and an efficient way. One great example is we launched this product called the 20-minute term sheet, which is essentially sort of, if you think about the term sheet as what founders spend months of their lives pitching investors to try and get this piece of paper, we figured out a way to do that in 20 minutes. And the cool thing was, our director of marketing, he coded the entire thing up, built it on AWS, spun it up in a couple weeks, which we would have never been able to do using any other sort of infrastructure. So that was a really cool example of how AWS has helped us.